Hi, I'm Kristen Whipple with Lakeside Realty here with Brian Spain and our special guest, Michael Spirito with Summit Mortgage. Hi, Michael. Thank you for coming. How are you?
Good morning. Good. Thank you guys for having me.
Hey, Michael, we are so glad that you could join us this morning. You know, one of the issues that we're facing as realtors these days is that as home prices increase, a lot of our buyers are scared that maybe they can't afford that home that they wanted anymore. We've encouraged them to reach out to their mortgage broker and talk to them to really see how the lower interest rates are impacting affordability on their homes. Can you talk to us a little bit about that?
Absolutely. Thank you guys for having me. One of the biggest misconceptions that being a loan officer that I come in contact with is a lot of buyers think that the price of the house is what's really going to offset and drive their payment up. But really, the biggest factor is going to be the interest rate. So, just for fun, I ran a couple of scenarios that I'd love to pose for everybody so you can see the difference. On a $300,000 loan at what were traditional rates, just a few years ago at 4.5%, you'd be looking at a payment of about $1,520. If you took that same $300,000 loan at today's traditional rate, competitive rate of 2.875, you're looking at a payment of $1,244. That's a difference of almost $276 per month for the same house. Now let's take that one step further. If you were to take a loan for, say 350,000, let's say, consumers are worried about the prices going up, and they are going up a little bit. At $350,000 at that same 2.875 interest rate, you're looking at a payment of $1,452. $1,452 is still almost $100 less than the house that was 300 at the older interest rate of 4.5%. So while house prices are rising some, it is still in a consumer's better interest to lock it in at a lower interest rate, even if the price of the house is a little bit higher. Let's take one more example. Let's say the house prices go down, and I'll wait a little bit, see if that 350 goes down to 325. Well, let's say that house does go down to 325, but rates go up to not even 4.5%, just 4%. You're at 1551 of a payment, which is still more than what you were at by locking it into the 2.875. So while there is a concern with prices going up, there is a much bigger risk of waiting for interest rates and letting that go up and how that's going to affect your payment. So what I educate my clients on is if your concern is pricing yourself out, you should be much more interested in getting it at a lower interest rate than worrying about what the house prices are. A $25,000 or even $50,000 swing is not going to have nearly the impact as the interest rate going up 1 to 2%.
Yeah, I think that's really important to understand. I know that a lot of our younger buyers, especially, they have only lived in a time of really great interest rates. So when they hear 4%, they think, oh my God, the sky's falling. The rates are so high. And they don't understand. Rates used to be 9%, 10%.
That's right.
My mom was a broker when I was a child. She still is. But growing up, I remember her telling me interest rates were like 12, 15, 17%.
Correct.
She would always tell people, no, buy a house, don't be afraid, because once the rates drop, the house prices are going to appreciate, and then you can refinance. So, it's important to understand the time that you're in and how, mortgages affect and how interest rates affect what your payments are going to be.
Correct.
And so, Michael, for our clients, do you have any tools or any kind of calculators on your website or somewhere we can find that the clients could play around with and try to kind of see where they fall?
Correct. Yeah. So on my website, there's all kinds of neat little mortgage calculators where clients can go in and type, punch in what down payment, different interest rates, different house prices, and play around with it. I am always very accessible as well. I have clients that call me that maybe are not always ready to just purchase yet, but are just getting some preliminary info, and I have different analyses I can run for them and email them spreadsheets and say, hey, with this price, with this rate, this is what you're looking at with this down. So I'm always available to help. My website has a lot of neat tools on it. There's lots of different ways to start getting all that info before you're ready to pull the trigger.
That's awesome. Of course, your expertise is going to be the best, but just for convenience sake, there are things on your website, then that's great. We'll share your website with everybody well.
Thank you.
And then does Summit have any special mortgage products that might be a little different than other mortgage companies or lenders?
Yeah, that's another question we get, Michael. It's like, why go with one broker over another broker? Aren't they all the same? What's the difference?
Well, that's a great question. And I get that a lot. When it comes to what are called traditional mortgages, which are going to be your conventionals and your FHAs, all those guidelines are actually set by the federal government. So technically, every lender has to follow the same guidelines. The difference is, believe it or not every lender is very adept and up to speed on what those guidelines are. And in a COVID world, those are actually changing more frequently than they used to. So it's very important to be with a lender that not just has those products, but understands all the guidelines, understands what can be done and what can't be. We do have a few niche products. For some of our self-employed borrowers, they prefer what are called bank statement loans, where we'll go off of their business bank statements and the deposits they're making versus the traditional tax return. We have foreign investor loans where we can lend to foreign investors that don't have a U.S. social. So we do have a few niche products, but I would say our expertise is more in just knowing exactly what our guidelines are and exactly what we can do and how we can help everybody, knowing every angle and pursuing every angle we can to get them approved.
That's awesome. Great news.
Also, I think you guys go a little bit further when you pre-qualify people so that they really know that the loan is going to close too.
Absolutely. Right? Absolutely. One of the differences that we do here at Summit is we will actually ask for all of our borrowers' income documentation up front at pre-approval. The reason we do that is because when we issue a pre-approval letter, we want it to be worth more than the paper it's printed on. We don't want to just issue a pre-approval based on what somebody says. We want to review income docs. We want to make sure everything is on the up and up. So when we issue that letter and we tell our realtor partners, hey, let's go ahead and get this client an offer. Let's start offering on houses. We're going to close. We mean it. We're going to close, and we're going to close on time. And we're not going to have any surprises with underwriting because we've been very thorough on the front end.
That's great. Well, we want to really thank you for taking the time out of your day to come and talk to us. I think the information you provided is going to be really helpful to our clients. And, you know, if any of our clients out there have any questions, reach out to Michael. He's a great guy.
Yes.
Happy to answer your questions. We will provide all of his information down in the details.
Thank you. I'm always happy to help.